So what is happening in the California housing market? Well, it all depends on who you're talking to or what you're watching. But in today's video, we're going to look at data that was just put out by the California Association of Realtors for the month of September. We're going to look at existing home sales. We're going to talk about inventory levels. We're also going to talk about days on the market. In addition to that, I'm going to give you my take on what's happening in the local real estate market as a realtor with boots on the ground. My name is Jeb Smith. I'm a real estate broker here in Southern California, and every time I do one of these videos and I only do the data, I get people reaching out wanting me to give my opinion on what I'm seeing in the market, and every time I just give my opinion, I get people wanting the data. So in this video, you're going to get the best of both worlds. You know, and like I've mentioned in previous videos, I've been doing this for nearly 18 years. So I didn't just come to the market. I've been through the last housing crash, if you will, housing crisis. I've seen the signs, I've seen the writing on the wall, and I'm going to give you my take. We're going to look at that data like I mentioned. We're also going to discuss a couple of things that's not mentioned in the data that could impact the housing market as we move into 2021. But do me a favor, if you like videos like this, you're new to me, new to my channel, hit that subscribe button. If you like content like this, and if you find the information helpful, valuable, give me a thumbs up. I appreciate you taking the time to watch. But let's talk about what I'm seeing right now as a realtor with boots on the ground. So currently, I'm a real estate agent. I'm a single agent. I have 5 listings at the moment. 4 of them are in escrow. I have 4 buyers in escrow, and I have 5 to 6 buyers at the moment actively looking for property. What I mean, they're actively writing offers on property. Why am I telling you this? It's not to brag. I mean, quite frankly, it's not that impressive because there's a lot of agents out there doing a lot more business than I am, but I'm telling you that to show you that I'm actually out in the market helping buyers, helping sellers. So what I'm telling you is accurate information. And what we're seeing right now, at least in Orange County, is we're still seeing a very low inventory level. I think in Orange County as a whole, we have about 4,100 homes on the market. This is the lowest level of inventory that we've seen since 2012. So that was 8 years ago, the lowest level of inventory since that time. Interest rates are significantly lower now than they were back then, which means we have a lot of buyer demand, a lot of buyers, very few properties to choose from. And what we're seeing is price appreciation pretty much in every category outside of homes over $4 million. In that price point, it's a little slower market, but that's not the majority of people that I'm talking to right now. The majority of people that I'm talking to are probably under that $1.5 million, $2 million price range. And in those markets, it's very, very hot. I've been putting in offers between $900 and $1.5 for, I don't know, the last 6 weeks, and on almost every single one of these properties there has been multiple offers, and we aren't lowballing these offers. We're putting them in at the list price, sometimes even higher, sometimes even significantly higher, and we're still not getting anywhere because what happens is all of the buyers on one particular property, for example, say there's 5 buyers that put an offer in on a property, only one of those gets accepted, right? Well, 4 of those buyers then move on. Well, when another home comes on the market in that same area, those 4 buyers are likely to bid on that property in addition to any new buyers on the that may bid on that property. So what you have is these buyers moving from house to house. We're in a position where we're likely bidding against each other in multiple scenarios, and what happens is the best offer wins. And what we're seeing is a lot of cash offers, a lot of people going up above the asking price, waiving all contingencies in some cases. So it's a very, very tough market for buyers. I expect this to probably continue through the end of the year into 2021, as I've discussed before. This isn't about predictions, though. This is what I'm seeing right now. But the housing market, typically speaking, this time of year, inventory will slow. So you're going to have less inventory on the market moving into the holiday season because buyers that were thinking about selling just don't want people in their house during holidays when they have other people over, and especially with COVID and potential colds and flus and all of that stuff, people just don't want people walking through their homes. So my guess is you'll likely see inventory tighten even further as we move into 2021. Rates will remain low, buyer demand will still be high. So there will still be a lot of buyers out there vying for very few properties. So that's what I'm seeing as a real estate agent right now with boots on the ground. And at the end of the video, I'm going to tell you the one thing that this data doesn't address that we're going to that needs to be mentioned. But for now, let's take a minute, pull up that data. So as promised, here is the September home sales and price report from the California Association of Realtors for the month of September. I've done what I've done in the past, and that is highlight the information that I thought was the most valuable in the article, as well as the data. And I will link to it below if you want the full article, because there's some areas in the state that I'm going to skip over, as well as some of the verbiage that I'm going to skip over. And in fact, even some of the highlighted stuff, I'm going to skim over in order to keep this video on the shorter side versus reading it word for word. So let's start by talking about some of the highlights that happened from the month of September. And that is existing single family home sales totaled 489,590. That is a seasonally adjusted annualized rate. What does that mean? That means this is an expectation through the end of December based on data that's where they expect it to be. It's up 5.2% from August and 21.2% from September of 2019. September statewide median home price was $712. That's up nearly 1% from August and up 17.6% from September of last year. So we're up nearly 18% in the median home price for the state of California from this time last year. That's a huge jump. Year to date, statewide home sales were down 3.7% in September. Why? We'll talk about that in just a moment. But California's home buying season extended further into September as home sales climbed to their highest level in more than a decade, and the median home price set yet another record high for the fourth straight month. As we mentioned, sales climbed above the 400,000 level for the third straight month since COVID started. And September sales rose 5.2% from 400 in August, and we're up 21.2% from a year ago, when 404,030 homes were sold on an annualized basis. So with home sales continuing to bounce back in September and sales of higher priced properties recovering faster than the rest of the market, the statewide median home price hit a new high after setting records in June, July, and August. And it reached above 700,000 for the second consecutive month in a row at 712,430. Again, that was up 1% from August. In August, it was 706,900. And last September, it was 605,680. So we're up almost 18% in the median home price in the state of California since September of last year. The yearly price increase was the highest recorded since February 2014. At the regional level, sales increased in all major regions from last year in the high double digits. The Central Coast and San Francisco Bay Area had the strongest in September, with surging 42 and 34.2% respectively. That was followed by increases in the far north, which at 28.3%, SoCal at 25%, and the Central Valley at 18.4%. The regional level, all major regions posted double-digit price increases from last year. The Central Coast had the highest increase in median price from 20.6% from last year, followed by the Bay Area at 20.5%, the far north at 19%, SoCal at 15%, and the Central Valley at 14.6%. So in SoCal, where I'm located, Orange County, we're up nearly 15.2% in the median home price from a year ago. That's a big jump, especially for anybody that was waiting, sitting on the sidelines, thinking home prices were going to go down. They went up nearly 15%. All but one of the 51 counties tracked by the California Association of Realtors reported a year-over-year price gain, with 39 of them growing 10% or more. Lassen had the highest price increase, gaining 51.4% year over year. Humboldt was the only county where the median home price was flat from a year ago, and no counties experienced an annual price decline. So on a lot of the videos I post, I hear people in different markets, different areas of California saying they're seeing, prices start to fall. Clearly, this is showing something different. Prices are continuing to go up.
on an annualized basis from this time last year, and even month over month, which we'll look at in just a moment. For sale properties continue to be added to the market at a pace slower than normal, and housing supply remains significantly below last year's level. The year-over-year decline of 48.4% in September was the fourth consecutive month with active listings falling more than 40% from the prior year. Why? Why are we getting less homes on the market than last September or for the last 4 months? Why are less homes coming on the market? Well, it could be a number of things. A lot of people have been able to refinance, lower the payment. So maybe that house is now more affordable than it was before. Those people no longer want to sell. You have people that are maybe in a catch-22 where they're contingent. They need to sell their property to buy something else. So without seeing inventory on the market, those people do not want to list their homes for sale without seeing something to buy. There could be a lot of reasons. One is, you've got people that are scared of COVID still, that don't want people tracing through their house. So there's a lot of reasons that people or inventory could be lower than it was last year. Now, with sales remaining robust and the growth in active listing continuing its declining trend, C.A.R, California Association of Realtor, we'll call it C.A.R, unsold inventory index dipped to the lowest level since November of 2004. It fell from 3.6 months in September to 2 months this September. What does that mean? That means we have less than a 2-month supply of homes in the state of California. Very, very low. Inventory levels, again, that we haven't seen in almost 16 years. Active listings continued to decline significantly in all major regions. The Central Coast had the biggest drop, down 60.3% from last September. The Central Valley down almost 52%. SoCal down 50%. The far north down 44%. And the San Francisco Bay Area down 32%. 49 of the 51 counties reported by C.A.R experienced a year-over-year decline in active listings in September. Santa Barbara had the biggest drop from last year, 84%, followed by San Bernardino at 66% and Merced County at 66%. So, active listings are down significantly. As we mentioned in Orange County, we only have 4,000 or so, 4,100 active listings on the market at the moment. The median number of days it took to sell a California single-family home was 11 days in September. Let that sink in. 11 days as an average, or the median rather, in the state of California. Crazy. 11 days, down from 24 in September of 2019. So last year, 24, that's a low number. 11 is really, really low. Putting a house on the market, they're selling very, very quickly. And for all of you that think that they're selling just because prices were reduced or what have you, statewide sales price to list ratio was 100% in September 2020. 100%. That means the list to sell price was 100%. Let that sink in. Properties are selling at fair market value if they are listed correctly. California single family home, September of this year, as we mentioned, median price is $712,430 for all of California. It was $706 last month, $527 for a condo. That was $506 last month. Last year, it was $460 for a condo and $605 for a single family home. That's a 14.6% gain in condos, 17.6% gain in single family homes. I won't get into all the crazy data here, but Southern California, $656 for the median home price in September, $640 last month. Last year it was $570. That's a 15.2% increase. Again, Orange County here, LA County, you can see the numbers. LA County, $747, $380. Last August, was it? Yeah, so just in August, it was $677, $260. And last year, this time, it was $663, $110. It's a 12.7% increase. And then in Orange County, where I'm located, this month it was $915. Last month, it was $930. Last year, this time, it was $830. So month over month, we actually went down in the median home price a little bit. But as a whole, from year over year, we're up 10.2%. So big numbers and jump year over year. Now, I won't get into the rest of this, but essentially it goes over more or less every major county in the state of California, and I'll link to that below if you want to take a look at it.
So you've seen that data, and as I've mentioned, I will put a link below if you want to download the full article so that you have all the information that was skipped over in there, just in time. In an effort to save time, if you will. But the one thing that I was talking about that's not mentioned in here is the state of California. We have an eviction and foreclosure moratorium currently. There's a federal one as well that expires at the end of the year, and likely, the inventory levels, as you saw, are very, very low based on that data. Well, what we're not addressing in this is how many properties are currently in that status where people are, potentially could be evicted if the moratorium wasn't there, or could be foreclosed upon if the moratorium wasn't there. And so what happened is at some point that will be lifted, and you'll have these foreclosures, these evictions come to the market. Now, does that mean a huge foreclosure wave? Does that mean a huge influx of investors selling property because they no longer want to be investors? Personally, I don't think so. You're definitely going to have foreclosures come to the market. You're definitely going to have some short sales in some cases come to the market. But my guess is because buyer demand is so high and inventory levels are so low, as those properties come to the market, they're likely going to get picked up pretty quickly by buyers just because of where interest rates are. Now, as prices continue to appreciate because of a lack of supply and low interest rate, affordability is going to become another issue. And so, at some point there has to be a breaking point, but when is that? And based on the lack of new construction being built and the lack of available homes coming to the market, it's likely to be some time from now. But those are things to think about. I get people asking me all the time, is now a good time to buy? That's a very tough question. Is now a good time to sell? That's an easier question because it's a seller's market. It's very easy to get your price if you list it at fair market value. And I've done other videos talking about buying in this market, so I'm not going to get into it here, but I will mention above if you want to take a look at that video. But I will continue to update you with new data as it comes out. But again, I'm not a doom and gloomer. I don't expect some huge foreclosure wave to come. I do expect some to come. I do expect some investors to sell their property as they can evict tenants, but I don't expect it to really change the market as a whole, at least for the foreseeable future. So I hope that was helpful. Do me a favor, if you haven't already, hit that like button and leave me a comment if you have questions. But I appreciate you taking the time to watch. I appreciate your support, and I hope to see you again soon. Having a great day. Bye-bye.